So I'm doing just a quick refresh of the trade that I did on the diagnostic hour today. I have open on the right the Nasdaq futures, and I'm using a 8-10 tick uh, chart. Okay, so 8-10 tick right there, and I'm using the continuum bars, the shadow continuum bars. These bars basically will make a new bar if the market moves 8 ticks in my favor. Again, the trend, like long at this point, or if it moves 10 ticks in the opposing direction. It'll also make a new bar if 5 minutes pass. So it'll do either one, okay? Um, so it'll go both. All right, does that make sense? So first, you'll understand that what the bars are. I'm using the continuum bars, which you access under the data series. So if I just right click over here and go to data series, Apex continuum bars, and I have 8, 10, 5. That's what you will see me using in most cases. Okay, so 8 trend, 10 reversal, 5 minutes. All right, for the template, if we go under templates and load, I'm using the Izone SharpShooter down here somewhere. There it is. Izone SharpShooter. So underscore, that'll help you a little bit to find it. And then Izone SharpShooter. Okay? There's a lot of stuff on this chart. All right, it can get overwhelming the first time you look at it. Don't try to don't get stuck in analysis paralysis. All right? When everything is pointing up, you got buys, and everything's pointing down, you got sells. Okay? So that's what I'm looking for. Okay, I'm looking for a buy when it bounces off of the support zone. Okay, and it's green. The trend indicator. This is a trend indicator that actually paints the color. And notice how I'm using open, high, low, close bars because I think it makes it a lot easier to read. But personal preference. Some people prefer candles. You just got to make sure the colors are set right. But I use OHLC, just black up and down. And because if it opens here, closes here, I can see whether what direction it opened or closed. But this paints the trend of the bars for me. Okay, and notice all the way up, we've been painting a green trend. So I had a green trend. My trend flip had flipped already. Okay, I'd broken the predictor. So there's the short predictor on the MVP. All right, my trend flip just kicked in and confirmed. Okay, my trend catcher right there. And this is where I bought. I bought in this bar right here because this one closed. Trend catcher flipped. And then a couple bars later, guess what? I got the MVP flip. Well, if you've ever traded Elite MVP trend catcher, okay, then you know that you like it when the MVP flips quickly. I'm going to go ahead and take profit on these trades. It's not massive, but, we made, what about a little over $500. So let's go ahead and capture that. Notice I'm not really stressed about it. Okay? If you're stressing about your trading, you're risking too much money. Okay? Now, the markets are moving really fast. Obviously, I'd be clicking really fast, but anyways. Okay. So, let's go ahead and we'll just close that one, grab the profit. Like I said, around $500 in profit on the trade. And we did that in the past hour because we got in over here at 12:30 and we got out at about 1:30. Okay, a little before 1:30. So about an hour, made $500. If you're just doing one contract on each, you would have made 50. I'm doing 10. Okay, but still, for most people, $50 an hour is a pretty good rate. Okay, so again, everything is telling me buy. The trend bands are green. Okay, we're coming. I like buying off of I zones that are green. I like selling off I zones that are red. when everything else lines up. So I know some questions were when I did a webinar a couple weeks ago. They're like, well, how did you know not to buy on that one and not on that one and not buy till here? Okay, well let's look at this and just sort of zoom in on it a little bit. Just look at the right side of the chart. Okay, just from what little I've told you, without knowing, if you don't know a thing about anything that we're looking at, okay, except for what I just now told you. Okay, I'm hoping that this will just sort of make sense to you. I feel like I'm cheating when I trade like this, okay, because it's pretty easy, and I want it to be easy for you too. Okay. So from the little information I just gave you, without worrying about what spread I bought or why I bought it, because you know what? It doesn't matter what spread I bought or why I bought it if you don't understand when to buy or sell the spread. So looking at this, we got a green institutional zone. Would you buy now? Are you ready to buy on that green zone? Who can tell me yes or no? Let's make this really like participatory. Yes or no? Would you buy right now? No. Why not? Why wouldn't you buy? The bars are red. Okay. Let's go over here. So bars are red. We got red sharp. We got the red, SharpShooter up here. We got the red trend catcher. We got the red trend confirm. We got a red MVP. We got a red. I mean, everything's red. Okay. Now we just now got a potential long. Right. Just now got a potential long trend catcher arrow. Right. So this is bringing it all together. Now that bar closes and it breaks below it. What would that trade be called? Swing shot. Yep. Did that swing shot work? Yeah. So you can even throw slingshots and stuff in here. Okay. All right. So that's just where, if you don't know what a slingshot is, just look at the Elite MVP training and we talk about slingshots. So I know people who live just on slingshots and elevators alone. So you make 10 ticks at a time. You do that like on, 20 times in a row. You've made $2,000 in a day. Okay. So, anyway, so boom, breaks down. We did get a long trend catcher, but we don't trade trend catcher alone, right? So, yeah, it wouldn't quite be a BMX yet. So for a BMX, it'd have to be a barely missed X. Now, maybe I haven't went back and looked at the last A and where it's at. So it is possible. But let's see here. It may be a BMX. Let's see here. You're going really technical. Some people are going to be like, what are you talking about? 4247.5. We're at 42.7.5. So right there. Nah, that would have made the X. So it would have broken through. So almost. So BMX would actually literally have to be one that does that and then pulls back. It'd have to pull back to be a BMX after getting within a few ticks. Okay, so everything's pointing down. Yes, I got a green, institutional zone. I'm coming into another green institutional zone. Actually, I made a new one just now. Okay, do I buy now? Is that a good idea to buy on this one? I mean, now I got two of them. Everything is still red, right? The only thing that we have is we have a trend catcher that's flipping. Okay. That's good, but not by itself. Okay, we need more than that. And I like to just, back up for a second and look at my charts. And one thing, that you were talking about on that BMX there, Ed, that you were watching for, at least I hope, is, hey, that's a low from like the morning session right there. It's also an area where we sort of hit this high. You see this right here? So we hit this high. It was a resistance level. And then it played on that level for a while. It broke back down below, went back above it, sort of bounced off of it, went up, came back down, went back up, came back down. So we definitely have an area where there's a little battle going on. Okay? You can sort of see that just by looking back historically. I like to see those levels. Especially when I think there's a trade coming up. Is there a history, a recent history, so that could be a valid trade to do. So it's bouncing up, going down, still red. Okay. Breaking down through it. Now we're at the one from overnight. Okay, this is a big level. See, it's thick. It's been here for a long time. And we're coming down to the lower ice zone. Does the market bounce off of the ice zones a lot? Have y'all noticed that? It bounces a lot off of the ice zones, the green and the red, those thick green and red bars. So that's a pretty strong level to buy, right? Are we going to buy it just because it's coming right down to that ice zone? Or do we want some sort of confirmation? What I like is I like some sort of confirmation because I like it to be objective. I mean, a lot of times I'm like, I know I'm reading the market. I know I'm right. But you know what? I've been wrong about as many times as I've been right about knowing. But when I just follow my rules and follow the charts, I do a lot better. I'm like, I knew I was right, Because we have a really good habit of remembering when we were right and a really bad habit of remembering when we were wrong. So I like the chart to tell me the same thing. That it's not that the indicators are magical. Okay? I should be able to see this without any of the indicators. What the indicators do for me as a trader, and I can see it without the indicators, but what they do for me as a trader is they objectify my subjective view of the market. Okay, so to say it again, they objectify my subjective view of the market. Subjectively, I'm like, I'm getting ready to buy. That thing hits that red line, gets within a point or two, I'm buying. Okay, that's a strong zone. I can look back, I can see price action. Everything tells me to buy that I see on the price chart. But I've been wrong a lot about that too, and the thing is, you get a lucky streak where you're right on price action, but then it just kicks your butt. Okay? So, whereas with this, I am objectifying that I have to not only see that I think there's a good buy setup, but I make the indicators tell me the same thing. And does that sometimes cost me a little money? Yes, but more often than not, it saves me from thinking I'm the god of the trading world and costing myself a fortune. Okay? So we've all been there, right? We've all had like those lucky streaks, or hopefully. But then the problem is we then think that we can read the markets. We're all ready to start a signal service and be masters of it and run a fund and, well, I don't know what happened. I was doing so well and then boom, So I like the objectivity added on. Now, what should I be thinking about? I think there's a buy coming up. Now, if I'm just trading NASDAQ futures, my options are pretty simple. Just be ready to buy. If I'm trading spreads, okay? If I'm trading spreads right now, what should be on my mind? I don't have a buy yet. Do I think there's a potential buy coming up? I mean, we keep coming down. We're coming down to ice. Usually market bounces off ice. We just hit through 1, 2, 3. 2 of those being big institutional zones. I'm thinking there's a buy coming up. And there you go, Mike. You hit it right on the head. Look for a spread to buy. I know I've been guilty of it. I was even a little slow on it today. Of course, I was hopping on the air and trying to do a trade in the air to teach. But, we all are guilty of it. But you really want to get really good at being in the habit of when you see a potential buy or sell or either coming up, you want to hop over to that scanner and you want to find the best contract for your trade. Okay? So, without going into which contract, we'll come back to that. But the step you should be doing right now, if this is the chart you're looking at, is you should be going, if it does go up, which contract am I going to buy off of? Okay, if I'm short, well, I'm not personally, like I said, I prefer in most cases to sell off of the sell zones, those orange or red looking zones. Okay, so I'm not really looking for a sell right now. I'm in a short right now, or I just got recently out of a short because it hit my stop. Okay, but I'm not looking for a short. I'm okay with missing out on, a trend. I want the best setups. I would love to get all the setups and all the big ones. Sometimes I'll miss out on some of that trend because I just don't get it. And that's okay. Now, do I sometimes jump in and do it? Yeah, if there's a tight risk and I'm willing to do it and I'm sort of breaking the rules a little bit. But I have the extra money to do that. I had the convenience of having, and I'm not trying to brag, I'm just saying, just a reality. I have a little more cash to be a little more high risk nature-ish, okay? The less cash you have, and I've been there. I started with when I started trading, I used my wife's teacher retirement account. We cashed out her teacher retirement account. You want to talk about high risk capital, okay? You don't want to tell your wife you just blew her retirement account. And it wasn't big. She only been a teacher for a few years. It was like $3,000. So that was a decent amount. It's more than a lot of people have to trade with, but that's what I started with. And I ended up, within a year quitting my day job. So it was a good investment, fortunately. But, I urge you to, first choose survival, and then when you have a little extra money, you can choose to do some wild things, but just choose the conservative, simple entries to begin with, okay? So right now I'm looking for a buy. I should be over here in the scanner looking for a buy trade. We're going to come back. We're going to focus on that so we can sort of keep the spreads in their own world, okay? Because the first thing I want you to master is it doesn't matter what spread you choose if you don't read the chart correctly, okay? And most people are trying to trade binaries and spreads, and they're like, I'm just losing. Like I don't know. Everything I do, it just seems to lose. Da, 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 da. Okay, one, they can't tell me what their strategy is, what their system is. Not their strategy. Strategy is buying and selling a binary or a spread or a future. But they don't know what the rules are. They could not tell me the rules on why they're choosing to buy or sell. Or if they do, it's just something they read online that was free. Hey, I'll just go do that. Well, it's free for a reason. Okay? We give a lot of things away free, but we have our most important tools, are obviously built in, and we're always improving them. So, like we just improved ICE this week for all of our subscribers. So we have that ongoing subscription that pays for ongoing programmers, and now ICE works on every Forex pair. So we're always trying to improve things, have a solid system, and we're trying to teach you those solid systems in better ways. I mean, is it going to be different in 6 months? Probably, because we're always improving. Okay? The moment I think as a trader I've arrived is the moment that I probably won't be a trader very much longer from that point. Okay? So have that system, have those rules, know how to read a chart before you try to trade a derivative of the chart. And then make sure you understand the derivative before you try to pick. Okay? Anyways, okay, so it's going on down here. And this is happening, by the way, on the air. I open this up. I'm looking for a buy. We're coming down to ICE. If you go back and watch the show, I'm calling this out live. It's coming down onto ICE right now. It's moving up. I think it's going to bounce off of this. Okay? So market's going, all that fun stuff. And so we look at it. And we got trend catcher. Trend catcher's flipped. That's not enough. We've seen trend catcher flip a lot of times on the way down. Okay, we want some confirmation. Going over here. Still looking. Now, has something else flipped? This is a little hard to see. But does anybody notice that something is flipped? Because I want you to start to see these first things that flip. What flipped right there? Oh, too far. Now we're cheating. Right there. What flipped? So everything you're doing right now is looking at the chart. So right here, we got trend catcher flipped. Trend band flips. Okay, we got that flipping. Okay, now that happened a couple times along the way. That happens quite a bit, right? what else right here? And it's sort of hard to see, but what else just flipped? It almost blends in, but there's no trend catcher out there. The trend line, the trend flip line. There you go. Perfect. Good job, Peter. The trend flip line flipped. Okay. Ah, stop it. So that light pink went green. There you go. Now that's not enough, but it's a lot. Okay. Are the bars green yet? No. What just so we got trend flip going green, we got trend bands going green, we got trend catcher went green. Now trend catcher just went short too. Okay. Uh, what happened to this bar? What color did it give us? What does that orange mean? Orange means chop. So we actually have a chop in our chop filter now, not just a red or a green, but a chop. Okay. So we got more chop, and that's the trend chop filter to show you which it's built into the template for you already. Okay. Right down here. Diagnostic bar trend chop filter. Okay? So, it's saying, hey, things are a little choppy. It's like, well, thanks for telling me because I've been noticing that the market's just going sideways for the last, 30 minutes. But it's confirming its choppiness. It's no longer trending. Okay? So it's saying, beware, the market may turn around. So that sort of happened back here. It's going short, got a little choppy, or then went short a little bit, got a little choppy, went long, got a little choppy, went short. Okay? So often before a trend direction change, you'll see it go choppy. Not always, but often. Then we see a green, and we see a pending trend catcher. While we have a long trend flip with a green bar, we're hitting right up on that MVP predictor line, which would be a trailing stop if we were still in, or if it wouldn't have got hit back here. And then on the next bar, it breaks it. Trend catcher's green, trim flips green, bar is green. MVP is not green yet. I want you to notice that. MVP is not green yet, but we broke above it. Everything else is green. I'm going green. I get in. 2 bars later, MVP goes green. For those of you who know the the trend catcher with MVP strategy, what does that mean? When you see trend catcher and MVP go green like a little bit later, what does that usually mean for you? If it's on like the 3rd or 4th bar, it usually means you're going to get a good trend. Okay? Doesn't always happen, but I'm not going for a scalp when I see that, right? Same thing happened back here. You can look at this one. So we had a couple. We didn't have all green on our trend catcher, though. Notice that. But on this one, we had red on our trend catcher. Okay, everything was red, like that was a valid entry. The SharpShooter, Izone system, all that. And then we got 3rd bar. What do we got? We got an MVP short. Boom. Okay? Comes on down. Yeah, no, market's moving up. See what happens when I start talking? But anyways, so it goes on up. Now, where is my so does everybody understand why? Like, without me being here, could you, if you were duplicating just this day at least, could you at least duplicate that trade and understand why I went long? Right there. Like, does that make sense to everyone in the room? When I say everyone, I mean everyone. And if you don't say anything right now, that means it makes sense to you. You can't complain about it later. Don't be afraid to be the one person that says, I don't quite get it. Okay? Because if you don't say it, it's your fault that you don't get it. It's not my fault unless you tell me. You tell me, then it's my fault and I got to fix it. But if you don't tell me because you're afraid of how you might look in the room versus being afraid of making the wrong trade in your account, well, then you got to put your priorities in the right place. Don't worry about looking bad. Worry about being profitable. Okay? All right, so everybody's saying yes. Going once, going twice. Everybody understands why we got in. Okay, you understand why we got short back here too, right? So we got everything going on? Okay. So, now where does that stop loss going to go? All right, we're in over here pretty deep. I like to put it on the deepest bar, usually from the zone. Now my swing low, notice how the market swung down, then swung up, then swung down, swing trading. Then swung up, then swung down, okay? My swing low is technically right here. Then it swung up and it swung down again before giving my entry, so I could actually use this one. It's a little bit tighter. Do not put your stops based on where you have your account size. Do not put your stop based on where you have your account size. Yeah, I know. I would have got max profit. I'm like, where you would have had your account size, okay? Put your stop based on where it should be based on the chart. Not like, hey, I can only risk 20 bucks, or I can only risk 10 ticks, or, hey, I know in one video Darrell said 8 ticks if I use a 6-tick bar, or, Look at the stupid chart and just see where it should be placed. Okay? Look at the chart and just see where it should be placed. Where has the market recently stopped and turned around? Okay? All right, and then I'm going to want to start trailing with my trend flip and my MVP when it flips. So VP flips. Trailing with those. It's gotten really close. Remember, you don't move it till the next one, right? So I didn't move to here till this bar opened up. So we're going long. So now we know where our stop is. We're trailing with the MVP or the trend flip or both, or whichever one's further closer depending upon your risk tolerance. Okay, further means you get back more of your profit or take a loss, but you have more chance of making more money. Okay. So now where are we targeting? Okay, does everybody understand the stop loss? So we got the entry. Does everybody understand the stop loss? Is that clear to everybody? Swing lows. Okay? I mean, I really want my stop as far away as I can get it. Okay? So that's what I'm looking at on those trades. Now, your size needs to be determined by how much you're willing to risk per trade. Okay? So if I'm looking at a stop of around 42.45 and I get in around 42.50, that's 5 points. 10 contracts, 50 bucks a point, $500. I'm risking, and I did 2 different ones, I'm risking about $1,000 on the trade. Okay? That may be way too much for some people. That's okay. All right? Just do 1, do 2. Okay? Don't worry about what the max risk, if you're doing a spread, by the way, what the max risk is. Worry about where you're going to get out of the trade. Okay? Anyways, all right, so everybody knows where our entry is, why we took it. Hopefully it's clear. From what everybody said, that was a yes. We put our stops as a swing lows, and then we start trailing it with the trend flip and MVP. Okay? Moving up. What are we targeting and why? What are we targeting right now and why? Okay, good, Peter. Got one blue ice line. Definitely. What else is right there? Settlement's right there. Yeah. So we have 2 things that are lining up that's called confluence. When more than one thing says the same thing. It says, hey, there's going to be a wall here. Now, understand, this wall may mean you hit it and you bounce and go the opposite direction. You may hit it, and usually when you hit it, you're going to work on it a little bit. Okay? And it may fly through. Or you just may go flat. But this is an area where you should expect a battle. Okay? What happened the last time it hit the ice in the settlement area? Just look on this short right here. Okay, it hit ice. It hadn't hit ice, it hit settlement, and it was bouncing right off of this area. Okay? It's been, about 10 minutes just in this one little area. Okay, and then it flew on down here. So we had a little battle there. We should not be surprised to see a battle. If I see the battle going the other way and I'm up like I was earlier, I'm just going to walk in some profit and enjoy it. I can always be ready for a next entry. I wasn't looking at it because we're doing the coaching session right now. But, so we get in, and we're buying it. It's going up, up, up. Just moving in there. Watching my trend flip. Really careful out of all of them. Okay. All right, so we're not quite there. We're getting really close. May not get there. Now we did. What did we form a new zone? You can barely see it, but we did form a new little zone. Okay, we busted through that zone, and this felt like this is like 10 minutes. This took forever. Okay, it was just a very long period of time. I know it may not feel like it when you're just looking at it right here, but like here to all the way up here is 10 minutes. Let me show you that again. Like this point to this point is 10 minutes. Okay? This point to this point is about 10 minutes. So it's moving very slow. Okay? Boom. We break in and we get into our ice zone. Alright? And we also hit our settlement point. Well, wow, we just hit both of our targets. Things are slowing down. We should definitely not be surprised if the market pulls back. Where should I have my trailing stop right now? Hey, when you only trade for an hour or two a day, 10 minutes is a large chunk of your time. Okay? Okay, so yeah, the MVP, predictor line, the trend flip, both of those, right? So either one of those are pretty much the same right now. So I like MVP predictor. It's my favorite trailing stop. Out of all the trailing stops I've ever made, MVP predictor is my favorite, by the way. I just found that it gives just enough room. Anyway, so now, do you see what just formed? We just got an eye zone up there. Okay, a short eye zone, right? See that on the right here, this little square box? So now I'm really getting a little concerned. Okay, so I've formed a short eye zone. Trend catcher went short. Trend flip is short. Or not trend flip, but trend bands are short. Okay, that's that little red area you see in between there. So those are short. My trend flip's still green. My bar's still green. So I'm not looking to go short, but hey, I'm aware. I mean, I'm not looking to enter short, but I am aware that hey, the market could be heading down. Okay, and I'm long, so I should be trailing my stop up. You can do this with spreads. You can obviously do this with futures. Using the stop trigger on the scanner, you can trail it up like the 4260 or so. All right, so we get over here, comes on down, it's getting close. Boom, breaks down. I'm out of the trade. That's where y'all saw me hop out of the trade. Okay? Was that a bad choice? Trend flip also went short, and we got chop. So, without looking to the right side of the chart, was that a bad choice? No. I put $500 in my pocket. I'm not going to complain about that, right? I mean, do that a couple times a day, making a couple $100,000 a year. And I mean this trade, by the way, over here was bigger than that one. So that was before I got on the air, right? So we're not talking like just insane market analysis guru. I mean, it's all green, it's all red. All right, so we hit our stop loss. And then I saw a couple other things. I mean, I'm seeing everything. Trend catchers going short, trend flip just flipped, trend zones. My bar still hasn't changed color. I'm not going short, but I don't regret getting out of this trade because it may fly down. It may fly up. But that's okay. All right? And if you were watching, at the beginning before we turned the recording on, I mean, my profit was going like 300, 400, 420, 350, I mean, it was all over the place, right? But I mean, it seemed big if you're not used to seeing that. I'm used to seeing my profits move by 100, 200 bucks, like over and over and over again, just up and down, up and down. Because I'm doing 10. If you're doing one, you're going to be used to seeing them move by like $10. Okay, so you don't really worry too much about it. You just get used to it. Now we got a short potential here that we can get in on. All right, and now our MVP goes short. Now I want you to notice something. Did the MVP happen? Okay, was the trend catcher green whenever the bars happened? I mean, sorry, was the trend catcher, were the bars red when the trend catcher said short? So right back here on the trend catcher, were the bars red? Was the MVP within a couple bars, within bar 3 or bar 4 of the first bar of trend catcher? Okay, now I haven't seen this right side of the chart because I've been on with you, but does that, from what you know about you trend catcher MVP traders, those who have mastered that system, does that say expect a big trend? No, if you were just doing trend catcher right there, you would have taken profit already and scalped, right? Off the trend catcher. If you were just doing trend catcher without all the other stuff on it, that's how you would trade it. Does everybody agree with that? Like on a normal trend catcher entry, if you weren't worried about bar colors like we have on here, you would have got in. You wouldn't have got the MVP by bar 4. You would have taken your scalp. You would have got out. Okay, so I'm trying to help you bring it together. Okay? So, and I'm also trying to make it easy for those who maybe don't know that system. The trend catchers are not on green or red. For that to happen, usually what has to happen, it has to pull down, pull up, and then push back down. So just like over here, you know, it pushed down, pushed up, pushed down, pushed up, and that's when everything was green. So the market had to oscillate a little bit, which usually happens before it changes. It'll usually sort of go down and sort of, you know, and that's why we usually scalp on those, because usually what happens when that happens is it'll often fake you out, do a head fake. So you could go short here, but nothing, like from what you understand, what I've taught you over all this time, is you like everything to line up. Trend catchers are on red bars, MVPs on bar 3 or 4, everything else is red. We got everything except for that trend catcher. Okay? So it's going down. If you take the trade, you're probably not unhappy. Would you agree with me? I mean, so far, so good. Okay? Because I'm trying to teach you if you did or didn't do this. I want you to be able to think, not just go, I'm a robot and I do A, B, C, D. I mean, come on, I want you to think. So if you took this trade, okay, one, I'd be using caution because of what I just told you. But two, where's my stop going to be? Where's my take profit going to be? Where am I targeting? Okay? Because sometimes you just take a trade and you're like, oh, I didn't even notice that the trend catcher wasn't there. You know. I want you to be able to think clearly when that happens. All right? Or you may go, you know what, I like taking them regardless. I don't care. So I just want you to have it. So if we look over here and we see this, and let's just say you got in on this bar right here, because I mean this one had to close red first. You hopped in, okay? You would have had to have it first at the swing highs, which is going to be back here. Swing high from your trend zone, and then you'd be trailing it with the MVP, okay? Or trend catcher or trend flip or whatever you want to do. So you're probably going to have it right now at about 42.60, or if you're tight, 42.57. So one of these three lines you're choosing, okay? If you want to choose the closest one because you're like, man, that's really far away. But, you know, that's your choice. But you got three choices here. MVP is my favorite. But just knowing that we're not in a trend, you know, necessarily spell out right there, I may be using the closer trend catcher line. I mean, trend flip line there. Okay. Trend catcher. Sorry. Trend catcher is the red one. All right. So you're in it. Goes. Okay, now look at what just happened. Okay. So again, I want you to be able to see all this because there's a couple cool benefits here. All right. So what? Trend catcher went there. Trend flip's changing, but also we just created a new green Izone. Okay. Doesn't mean anything yet, but I'm aware of it. Notice how I'm trying to be aware of everything. So I'm not like, waiting until everything flips to be, oh, now I need to take a trade. I need to be ready and watching and seeing the signs unfold that the market is about to flip. And basically what I call this is, instead of having my subjectivity of what I think is going to happen, I'm trying to add an objectivity to my subjectivity. Okay, I think the market's probably not really going to pull down because of how trend catcher and MVP and all that went together. I think there's probably going to be a buy. If I am short, I have my trailing stop. I'm pretty close to break even at this point. Maybe very small risk right now if I have it down at 42.57. And getting ready for a potential long buy. Okay. So now it goes over. Boom, flies up. Hadn't quite hit my stop. Now trend catcher, trend flip, trend bend. We're waiting just about everything. Trend flip is the only thing that hasn't flipped along with the VP there. We need the green bar. Okay, man, we're pushing it right now. We're like right on. We're probably stopped out. If you're using MVP, you're about to be stopped out. If you're using trend catcher, you're out already. Okay, so you're out of the trade. You're not long yet. Okay, not long yet. But you're out. Is that a bad thing to be out on that trade? Even if you got in, let's just say right here. You got it right there. Probably at a very small, you're talking like a 1-point loss. Were you wrong on that trade? Were you wrong about it? Perfect answer. No. You were wrong if you stayed in that trade. Okay? That is what would be wrong. You were executing it correctly. You executed your entry correctly, except for you may have decided to pass on that once the trade catcher didn't line up, but at least you managed your risk, you trailed your stop, and you exited like you were supposed to. That is the right trade to do. If you can gain 10 points here or 15 points, we gained 15 points right here, we gave up like 1 point here, that's good. Okay? Still pushing up. Finally, we get a green. Everything's green. Now, again, that's sort of the same thing going on. Okay? Not our usual trend setup. Probably going to get some chop in this process, is my guess, because we're just the way that things are moving. Trend catchers weren't on green bars. MVP wasn't on third or fourth bar. If I was doing just trend catcher, I would have hopped in, taken 10 ticks, hopped out. I got a slingshot setting up on top of that. So a lot of little trend catcher slingshot trades happening. Doesn't look like the best trend setup. I can still hop in the trade. My swing low down here, and then trailing it with my MVP and trend flip right there. Okay? Goes on up, goes on up, goes right. Now we're heading right back into that same zone where we had resistance. Okay, this is probably going to try to get us really excited, try to bust through a little bit. We'll see. It's moving up, moving up. Okay, going good. Now it's starting to pull back down, moving up. So got a nice little run out of that so far. Okay, my trend catcher is flipped. My trend bands have flipped. I've created a short Izone. Okay, so we got three things pointing to the downside. Notice how my MVP and my trend flip just moved way up. These are continuum bars. 8, 10, 5 minute. Okay, my stop is right here. My entry was right here. Stop's right there. Is that a good place for a stop? I mean, we're right inside the area where it can easily fall back. So what do y'all think? I mean, is that, if I'm going to have a stop and I'm going to be in this trade, is that an area I might want to actually have it? So yeah, definitely. I mean, because this is an area that can fall right back down. Okay, like what did I say? With all these little trend catchers happening like this, see how the trend catchers are happening? They're not like sort of setting for reversals. I think we're looking at more of a choppy area anyway. Haven't hit it yet. Haven't hit it yet. Boom. Okay, we hit it. So took a few more bars. It sort of danced around it a little bit. Hit it right there. Okay, so we made a little profit on that. Not huge, but we made a little profit. So 42.62 to 42.67. 5 points. So if you're doing Nasdaq futures, that'd be $100 on a single contract. If you're doing spreads, that'd be $50 on a single contract. Okay, just on that one trade. Plus we made good money here, good money here. So all right. So now what? Well, now we have a short eye zone. We don't have a long eye zone. So we're looking for a short trade. I prefer, again, not to do long trades off of short eye zones. I may miss out. If I do, I'm okay with that. And now that's where we're at live. Okay? So now I'm looking for a short setup. And I just sort of need everything to line up. Could I have made more money if I would have sold at the top? Yeah, of course. But you never do. So, or okay, you do. It does happen, but you're like, wow, I can't believe I called that. So the rule of thumb on trading, by the way, is to capture. You're among the best in the world if you can capture 30% of a trend. Okay, meaning you're not getting the bottoms, you're not getting the tops. You're trying to get 30% of the trend. I mean, that trade right there caught about 30% of the trend so far. We don't know; it'd have to turn way around. But we caught that on the last one, that big move right there. So, I mean, we're going for about 30% of the trend. Sometimes we get more, sometimes we get a little less, sometimes we lose a little. But if we can make 5 points, lose a point, do it objectively, then trading becomes a lot easier, a lot more relaxing, a lot more enjoyable. All right, so what questions do I got from you right now? If any. All right, now we still have to talk about the spreads, but I just want to make sure we're caught up on that. I did use 5 or 10. I wouldn't use shorter. I wouldn't use longer than 10 or shorter than 5. Unless you're trying to. The only reason I do that is if I was trying to do like an hourly binary system or something like that, then I may make them 60. So that way I could get all the price action, but make sure it ends my bar every time on an expiration, right? So, you'll have to find out for yourself. There are infinite combinations. I can't tell you how every combination will react. I just know what I do every day. So I'm just teaching you what I do. Can you try 10? Can you try 20? Can you try 60? Yes. You can try whatever you want to. And it may be even better than what I do. If it is, tell me. But yeah, people try to ask me, well, what's the best? And I'm like, well, there's an infinite number of combinations. Nobody's ever going to know the best. There's no such thing as the best. It's just what works for you. This is what I do to make money on a consistent basis. Y'all see me make these trades using this exact system on air for quite a long time if you've watched any of the shows. And this is how I do it. I don't think the 50 EMA would help me at all, Tony. That's why I don't have it on my chart. But it may be great. I don't know. like, it's one of those things like I don't want you to go like, oh, this is the only way to trade. One of Apex's mottos is don't follow the guru, be the guru. I'm trying to teach you how to be that guru. So by empowering you to understand how to read the charts, you may change a setting here or there. You may add an indicator. You might find something that makes this twice as good. And if you do, let us know. That's the whole point of Apex. Is it's a community where we all grow together, including myself. I'm a better trader because of Apex. I know I own it, and that's all fun, but I'm a better trader because I work with other traders, and we all share ideas. So I take time of day into consideration at all when deciding on a profit target. I guess I always take time of consideration in the time of day into consideration at a certain point. But I mean, usually the market moves just slower or faster depending upon the time of day. Doesn't mean it doesn't get there; it's just gonna take longer. So if you're choosing like a binary, yeah, that's why we have that expected time indicator. It tells you how long it'll take for it to go from point A to point B. But I mean, all in all, I mean that's why I use end of day contracts, so I don't have to worry about time of day. I'm just like, hey, it's going here. You know, when I was on the show today, I'm like, okay, it's going down here. And when it does, I think it's going to go up, and I think it's going to go to here. And if it does break through that, I think it's going to go to here. And we've done exactly that. Um, I don't know what you're laughing about, Marilyn. Um, yeah, the swing high and swing lows for your initial stops. You want to trail it because you don't want to give it all back. I mean, if I left it my stop up here on this trade, that would have been very painful, you know. But yeah, for an initial stop, it's a lot better than just like 10 ticks, right? Because then you just get hit. So I mean, there are systems where we define, like, really try to define the rules for you to help you learn how to follow rules. Okay, and I tell people like it's not about making money; it's about learning to trade well. And once you learn to follow rules, entry, stops, trailing stops, take profits. Okay, once you learn to do all that, then, okay, then you can back up a little bit and start looking at things like swing highs and swing lows, and you can start calculating correct position size based on risk. If I'm willing to risk $50, or if I'm willing to risk $500, and the risk is $50 a contract on that one, then hey, I can do 10. If it's $100 contract, I can do 5. If it's $500 contract, I can do 1. So, you know, whatever your risk is will let you determine your position size. You know, but first you got to learn just hardcore rules so your mind can relax enough to pay attention to like what I'm showing you now. And this is, I mean, this is pretty simple. I mean, it's all green, all red. Swing high, swing low, trail with it. You know, one of the traders said that Ezra said, you know, I make it look easy, but you have trouble executing according to the rules. So I'd have to know what that means. Does that mean you're having trouble executing according to the rules because you don't understand them? Or does that mean you have trouble executing according to the rules because you think you know better? Or because you're greedy? Or, and I mean, hey, I'm there on everything I'm saying to you, by the way, like, I'm guilty of. So, and if you're not, then that means you've never traded. So what do you mean by you're having trouble executing according to the rules? Okay, so you're greedy, you don't understand the rules, and you just don't follow them when you do? Is that right? Ezra said all the above, by the way, if you're not on this inside the room and you're watching the recording. Well, you got to give me more specifics. If you just say I have no ability to do anything, then I can't help you. You got to be a little more specific. If you say I'm a blind man, and I'm like, oh, does that mean you need glasses? I give you glasses. It isn't going to help you if you really are blind. But maybe you just have blurry vision and you need glasses. So you got to be a little more. We got to be a little more. We got to figure out what the diagnosis is to solve the problem. So Ezra, tell me more. What's a swing high low in a chart? Yeah. Basically, okay. So back here we're going long. Okay, right over here. We're looking for when the market basically turned around. Because if we're going long, that means we think the market's trending up now, right? So a swing low would be where did it go down to before it turned around and went up? So it went down to here. That's a swing low. Okay, and then it came up, and then it swung back down again before it went up. So there's another swing low, a little higher swing low. So that's a swing low. That's my initial stop. And then I can start trailing with the trend flip or the MVP, which is my preferred. As you can say, usually they get you out together, but sometimes if you take the other ones, they'll get you out too soon. If you use trend catcher, it may get you out too soon. If you use trend flip, it may get you out too soon. I found that almost all the time, the MVP seems to get you out at about the same point that trend flip and trend catcher would when it gets you out. Like they all sort of got out hit at the same time. But if you use the other ones, a lot of times they're too soon. A swing high, just to give you, well, I mean, we have one, I guess, right here on this one. We went right over here, and we had a short right there. What was this, the highest high before? There's the swing high. So that's at least where my stop's going to be, and then of course I can immediately trail it on down here with trend catcher, trend flip, and then I'll start following MVP. And notice how they all end up coming together at the same point. Cool. So you got swing high, swing low. Thank you for asking that. I love it when y'all ask questions because it means you're thinking, and I'm actually helping you. When nobody asks questions, I'm like, nobody's getting what I'm saying. They're just saying, uh-huh. On the swing high and low, no. I may give myself like a couple ticks. I usually use like 2 or 3 ticks below a high or a low, but not points. I'm not going to give myself like 30 ticks of cushion. Like, I already got a lot of cushion. This thing's like way freaking up here. I usually give myself a few ticks cushion on everything I do. I mean, you'll see like I enter 3 ticks below the low or above the high. I put a stop 3 ticks below the low of this or above the high of that or above the predictor or below the predictor, right? So I usually use a few ticks, but not points. So yes. So yeah. Oh, you meant ticks. Okay. Yes, you got it. Yep. And I don't know honestly if a few ticks makes a difference. Psychologically, it makes me feel better to know that it broke what should be my stop by a couple ticks versus just like it hit it and then turned around and went the other way, because that just pisses me off. So if it hits my 3 ticks below it and then turns around, well, it hit a few ticks below it. How much further am I going to make it? So it just, I don't know, psychologically, I think, honestly, more than financially, I think is why that I like that rule, because I don't just get hit by the tick. I'm like, well, that's the tick, and I'm going to put it 2, 3 more ticks. I have a limit, like, a few ticks. 5 is the most I use. I got something like oil that's more volatile. But psychologically, it helps me know that, hey, I had a little cushion there. It hit my cushion. I'm out. Because it just really pisses me off when it hits it and then turns right back around. And if it hit the cushion, well, then there's nothing I can do about that. And psychologically, you want to be sound when you're trading because that'll influence all your other financial decisions. So it may sound a little wacky, but I don't know, it works. Let's see. Ernesto, I'm having trouble when the trade is going in my direction. I see it headed a couple of Izone bumps together. I've been getting out when it gets there, but I saw a few trades go right past it. What should I do when I come across that? Or is there getting out a safe way to go? Well, one, if you're taking profit, that's not bad. Okay, I mean, I could have made 5 more points, 50 more bucks, 20 contracts. It's like $1,000. I could have made a lot more money if I just would have hung out. Okay, but it's okay. I made $500 on that one trade. So don't beat yourself up over that. You'll just mess yourself up if you go back and try to re-guess everything. Usually you're going to see that when it's going to get you more and more is whenever it's being like this. It's like really, swinging around like this. And notice the same thing. Like notice in this chop, look what's happening. See how the trend catchers are not in red? They're not in green. MVPs not within the 4th bar usually, not in red. That one is in green. Actually, does go up a little bit. This one's green, does go up a little bit. So this one's red, goes down. Doesn't have MVP, but it had it earlier back here. Those are red MVP. Got a nice trend. Okay, these are red bars with a green trend catcher. So see how that chop is happening when the trend catcher. Often when the trend catcher is not the same color as the bars, you're going to get those smaller moves, okay? So a couple things that I've learned on that is, one, you can choose just not to trade them, but I like to trade when I'm sitting down. So the other thing you can do is you can just go to the target and get out and take profit when it's choppy like that. So like if I was going over here and boom, I wanted to start trading between the zones. It's like boom, I could take that. I go short here, even though I'm not going for a trend, so I'm not waiting for all the reds to line up, right? Go short, get down into a green zone, take profit. In the green zone, go up. Hit the red zone, take profit, go short, come down to the green zone. Now I could take profit on this one, except for now everything's red. So saying, hey, stay in this one. It's going to go a little further for you. Start trailing it. trail that one down. So that's one way to trade those. Is when you see them, you could just trade them from zone to zone, especially when you see that there's a couple zones that are close. Not when they're like hugely far apart together, but when you got a red and a green together. Do you see what I'm talking about, Ernesto, right here? I mean, there's a red and a green together. You can easily just trade right between the zones. Except for when you see this. When you see this nice setup, now that you've learned to see it, like the short trend catchers with the red bars, with the red MVP. I mean, that's the one that, hey, I'm going to stay in that sucker and let it go. Okay, and you may get more than you would on a normal trend catcher trade because you're going to trade it down to the zone. You're going to trade it up to the zone. But I'm going to trade it and I'm going to get out and take profit. Now, what about when it's just going up, 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 and there's a lot of zones stuck together? I think that may be one of the scenarios you're mentioning, right? See if we can find one. Because right now these are just really pretty. There you go, something like this. Okay, where you got boom, 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 boom. Is that what you're talking about right there? So right here, if I get into this, I'm going to do the same thing. I'm going to follow my rule. And I'm going to trail my stop. I got my MVP. And say, I mean, look at this. We're going in here. And let's just say we went long and we stayed in this trade. You know, this is not my ideal setup because I do like the trend catcher with the MVP first. But let's just say you're in the trade. Goes up. We have our stop here. Hasn't hit it. Hasn't hit it. Hasn't hit it. Hasn't hit it. Okay. Hasn't hit it. We got another zone. Right there. Again, a few ticks off, so it didn't quite hit it. Still in it. Still in it. That one definitely hit it. Right there. Okay, that broke through and hit it. And then it moved up and we missed out on that bit of the move, which happened between like 4:20 and 4:50 in the morning. And that's okay. I'm looking for shorts at this point. I'm not going to take those trades. They're not high setup trades. Okay? All right. Let's see here. Does that help, Ernesto? Or do you need more? Like I showed you a couple things there. Like basically just trailing your stop is the way to handle a whole bunch of those lined up. I can always redo the camera. Is that better? My refresh is as high as it gets, Lori. So yeah. So again, just to answer that, right here, I just turned it off and on again for you. Hopefully you can see that. All right, so to re-summarize, when I see a green Izone and a red Izone close together, and the trend catchers aren't matching with the color, like I get a long trend catcher, then I'll use that swing low there. I'll buy. I'll exit when it hits the upper Izone. It's like right there. And then I got a short Izone and I get a short trend catcher, but again, green bar is going on. I'll sell and I'll buy back right there, really quick. Okay, and then it comes back down. I get a long Izone. Again, there's a short Izone close. Notice they're close, okay? Then I get a long trend catcher. Colors don't match. I'll buy. I'll sell right there, okay? So it's just an easy way to play between them. So if not, I'll wait until things line up. Like right here, these are not close, okay? So 20 points apart is not close. So would that trade have worked? Yes, it would have worked beautifully. Am I going to take it? No. So trend catcher didn't even fire off. All right, so everything's looking good. We get red. Now I'm going to go short. Going to put my stop, swing high, trail it down, go with it. Boom, 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 boom. Out of the trade right there. Okay? And then we were talking about what do you do with when you got all these like red eye zones and you got a long, and how do you handle that? And so I was saying back here, let's say you went in and you got long on this trade, and let's just say you're going with it. Okay, not just getting out because they're close. Let's just say you were just going with it for an example. You're trailing right there. You got your predictor to trail. Predictor, 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 going, 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 going. A few ticks off, still in, going, going, hit. And so that would took us through 1, 2, 3, 4. 5 different, short eye zones before we finally got stopped out. Did it go a little further? Yes, it did. It went quite a bit further. Did we miss it? Completely. And we made a lot of money missing it, so it's okay. All right? So, if you get that one-third of the trend, if you get one-third of the trend, you are a very wealthy trader. Okay? We go back, we review the trade we just had over here. And we got out right there. I'm like, oh man, it could have went up so much more. I could have made so much more money. And really could have. It's freaking awesome. But it also came back down. How would you have decided to get out there? Well, about the only way I could say I could have got any higher is when everything went short. I could have got short. So I could have got out, maybe about 4 or 5 points higher. But that's about the only solid sell I would have had. Hitting that stop right there. I mean, this just busted through by more than a few ticks. And so I stayed in, and, I could have stayed in if I wanted to. If I did, I would have got out there, a little more profit. But that's hindsight, okay? And in trading, that doesn't really work. But I got this profit right here. I got, decent amount of points. I'm happy with that. Now I'm ready for a sell. I get a short, okay? So, fine. Take the short. If you go short, you got your swing high. I don't really like that the trend catcher's not all lining up. So you got your trailing stop back here. It's coming down. Now we get a trend catcher with an MVP lining up. I like that. So that makes me feel better about the trade. Notice this is important. The predictor flipped, but it never got hit. Okay? So my stop doesn't move. All right? So see how the predictor's right there? And then MVP flipped? Okay? But it never hit my predictor stop. So I'm still short. Then I'm following it, and it's still going. Okay? And, we're protecting a little profit at this point. Not much. We're up a decent amount. But we're just protecting a tiny amount of profit. But, we're saying, hey, it may fly on back down. If it does fly on down, where's it going to go? Well, probably at least this next high zone right here where it bounced off of it down to 42.51. We'll get about 9 more points. Will it make it? I don't know. It could come back up here and just oscillate on this for the rest of the day. But we got that. We have a trailing stop. That trailing stop's lower than our initial entry. We're at a good point. Now we're just trying to see, how much money can we make? We can take it off now and lock in a decent little 10 points, or we may lock in another 15, or 20 right there by letting it go to the potential target zone. But you got to give it room to breathe, and that's hard. Okay, so sorry about the interruptions there. Any other questions that we have remaining? I mean, do y'all feel confident about it? Do y'all feel like y'all could help each other on it? I mean, I'll be in here tomorrow too. But do y'all feel like y'all could help each other on it? And then why don't we do tomorrow for our webinar? Y'all have seen this. I'll get it uploaded. Okay? Tomorrow for our webinar, we'll come back and review it again. How does that sound? Okay. Now, I want to do one more thing before we close the webinar down. Okay? I want to look at the spreads. So let's say we were looking at a buy. I don't really care about what the chart says right now. I'm not really trading, so don't try to place a trade. Okay? I was before, but now we're just reviewing. Now I'm trying to pick a trade, and I got a buy in front of me. Okay? This trade is going to expire in 13 minutes. Probably not the trade I want. Does everybody agree with that? I mean, it's not horrible, but, it can take 10 minutes for the market to do a whole lot of nothing also. No numbers are blocked. I just had the buy side chosen because I'm choosing buy. Over here, instead of both, I just chose buy. What numbers do you feel are blocked? So just click on that icon. It'll pull up this information. Nadex is 0.1. It's not really hard to see. You don't need this information. I mean, one, it tells you what the underlying tick size is. That's a quarter. It ticks in whatever the smallest digit is right there. So 0.1, 0.2, 0.3, 0.4. That's the smallest digit. Okay? So when we click on that little icon, 0.1 on Nadex, 0.25 on NASDAQ, you should know this without having to click it. If you don't know it yet, you should stop trying to trade that spread until you understand this. And don't trade another spread until you understand how the price changes. Okay? Basically, every point is worth 10 bucks. Okay? So, because there are a point or a dollar, there's 10 dimes and a dollar. Does everybody get there's 10 dimes and a dollar, and that's why every point on a Nadex spread for a US Tech 100 is worth 10 bucks? Does everybody get that? All right. Does everybody get on NASDAQ why it's 20 bucks? Because there's 4 quarters in a dollar, and every dollar's worth 5 bucks. Does that make sense? Okay. So 2 Nadex spreads, because they are worth $10 a point, would equal 1 Nadex future at $20. That makes sense to everybody. Okay. Now, unless they're at the same price, that isn't necessarily the case. It is at like expiration, okay? But until then, you know, right now, if I buy this contract right here at 42.73 and the market's at 42.57, that's 15 points difference. So do you understand why the market would have to move 15 points as of expiration? Because this spread is going to expire. The price, the value, is going to expire where the market is, or if I'm buying, the floor. Okay, whichever is higher. So the market's at 42.75, it'll expire at 42.75 if the market went up to 42.75. But if it expired at 42.59 and the floor is 42.70, it'll expire right at 42.70. Well, what happens if I buy at 42.74 and expires at 42.70? Is that a win or a loss? Did I make or lose money? Okay, because it expired lower than where I bought it. That's how everything in trading works, right? You buy low, you sell high. Don't make it weird because it spreads, or binaries, or vanilla options, or forwards, or futures, or stock, or ETFs, or CFDs. It's always buy low, sell high. Okay? That's a universal rule in trading. And you can do it both ways. You can sell high and buy low, or you can buy low and sell high. Always the same. The difference on Nadex is your risk is capped. Okay? But do I want something that has to move 12 points? And we have it listed as proximity in ticks of the underlying market. So 55 ticks. Okay? How many ticks are there in 1 point on NASDAQ? How many ticks do you got in 1 point on that? 4. So if we got, it's almost at 60 now. If we got 60 ticks divided by 4, that means the market has to move 15 points. Now, as of expiration, for this to make money if I held to expiration. I usually don't hold to expiration, so it doesn't necessarily have to move that far. But there's I could still make money if I bought it and the market went up. But it's going to be a lot slower. Okay, it's just going to move, like the market may move 5 points and this may move 1 point. Okay? So it'll move a lot slower. When it gets to the floor, when it gets to 42.70, it'll move at about 50% speed. When the market moves a point, it'll move like 50 cents. Okay? When it gets to the market, when they're the same price, the proximity is close, then it'll almost move dollar for dollar. So like 2 spreads would be like equal to like 1 future as far as movement. Okay? So, all that to be said is, do I want a spread that has negative premium, which means that the market doesn't move I'm going to lose 38 bucks. The risk is low. I love that. But do I want the market to have to move 15 points before I really start making some money on the trade? No. Correct. Now, high premium is not bad if it's in the other way. This one's 31 points, but it's in the other direction. Okay, look at this one right here. The market's at 42.59. I can buy this at 42.52. Who out there would not love to go in and buy Nasdaq right now at 42.52 when it's priced at 42.59? Who would love to do that? Would you like to buy the market 7 points lower than where it's live priced at the moment? Yeah. The bigger the proximity, the better, right? That means it's deeper in the money. Often. Okay? Now notice it's a negative proximity and a positive premium on the buy side. And you're going to see because it has a big positive number next to it, right? So how do you know if it's positive or negative? Because what if you have the sells? Just look at the premium. Is the premium positive or is the premium negative? Yeah, 69 bucks. I see them up at 100, 150. So, and that literally is like the contract right there. See, it's above. It's just above the ceiling. Look at the ceiling is, what, 42.60, and we're like at 42.60.2. The market's just above it. Basically saying I can make over 70 bucks right now if the market stays flat or goes up. Okay? And it's all premium because the market, now it's, actually now about a point or two of it is real value. So now notice, these are just some on the, fly lessons here. But now notice how you see like 60 and 83. Now the max reward is exceeding the premium. So now the market's getting to where it's inside that spread. It's just so close. There we go. There we go. Let's refresh it by unclicking and reclicking it. It sort of stays there while you click it. So now it's sort of in there. So now it's like 54 bucks. But I got an edge. I got a 24 tick edge. So that's like 6 point edge. I'm buying 6 points lower than where the market's currently priced. So you'll see me do that a lot. Today, one of the trades I did, okay, was in the money when I did the trade. I went over here, and I bought that contract, 42.46. The market was like at 42.52, okay? So I bought it like 6 points in the money. All right? And it was like right, yeah, the market was about right here when I got into those trades, okay? So market was at 42.52. I bought a few points in the money. It made money a little slower, but, I had 6 points in my favor, okay? So a lot of times I'll trade deeper in the money spreads just because I get that financial edge. I like buying 6 points lower than the market. It's a good feeling to buy 6 points lower than where the market's currently trading. Okay? So, hey, go against me. It doesn't mean I lose. Now, if as of expiration the market hasn't went down 6 points, I'll make money. If it goes up, I'll make money. If it stays flat, I'll make money. If it goes down a little bit, 6 points or so, I'll still make money. I like that. Now, if it goes down live, of course, it's going to lose, but it won't lose extremely fast. Because it's, again, that price is moving slow. Okay, because the proximity is higher. Now, I may choose to go in, and I might choose one that does have some premium on it. Like this trade right here, I bought it, 42.54, and it had a couple points of premium on it. And somebody asked earlier, why did you buy one that had negative premium? I'm not worried about it because I'm not holding it to expiration. So I like the positive premium in my favor, just because if I do end up having to hold it, and often that premium can get sucked out really quick, which is nice, okay? But if it's a little bit of negative premium and we're close to the center of the contract, I don't really care about there being a little bit of premium in there. I want it to be small. I don't want it to be like massive. I don't want to go in and buy like that contract that has 46 points of premium. But I mean, like this one right here, that was basically flat right now. but 20 dollars a premium or whatever. I mean, that's 2 points. And one thing people forget about premium is they think it all goes away the second you hop in a trade. Okay. Um, it doesn't go away just because you're in the trade. It goes away because the market moves or time passes. So if the market moves in my favor, I'm going to be fine. If the market stays flat, then yeah, I could pay a couple points on premium. But I was looking at the dollar for dollar when I pulled the trade up, and I'm trying to see if I have any of those. I was trying to grab them earlier. And let's see here. 2015 today. I don't know if I got any of these shots or not. But you can go back and look at the show, and basically, I can pay $20 and only have to put up like $150 a contract, or I could pay like almost nothing in premium, but have to put up like $300. It was a lot better use of my money on my risk reward ratio for me to do that trade. Let me check here. Um, and so I just want to find one that's close premium, like close proximity. It may have, $20 or so of premium, whatever in it. Or I want to find one that is positive premium when I'm doing a directional trade. So one of those two. Does that make sense? And all my trades are based on the chart. When the chart comes up, I go, okay, I don't like that one. Let's see, that one, that one, that one, that one. Okay, those are my options. Okay? I also could look at these. That's only 5 ticks away. Let's see, that one's like 14 ticks away. $35, $35. I get another 10 minutes and I got to put up $70 more. Yeah, forget that. I prefer that one over that one. If I look at these two, like $10 less, like $20 less premium and only $10 more risk, max risk. I like that one. If I look at these, I'll go, okay, that I got to put up a lot more money, but I have a lot more profit potential. That one is not moving 36 points in the next like hour. So why put up $440 a contract? Okay. So now I got a couple positive premium ones and one negative premium one. So depending upon my account size, I could choose which one I want to do. So let's say account size was a factor. Well, then there's an easy choice for you. Understand, it'll move faster in the middle third of the spread. Okay? So our middle third is pretty small on a 100-point wide spread. So it's going to start slowing down. That's why I like the end-of-day wider spreads. Okay, now this one's coming down to $8 and $20 a premium, so I like that now. So out of every contract, I'd probably choose, honestly, this one. Or I would choose that one right there, because I can put up $100 versus $200. Okay, I have a few points of premium I got to give up, so I don't like that. It was lower a second ago. It was like 20. So I want it to be like in that 20 range. So I'd have to come down a little bit before I'd buy it. And then it'll probably go up, by the way, by the time. Well, actually, if it's negative, it'll probably go up a little bit and drop it if the market rose. Or this one right here. I mean, this is a great trade. If you had the money for it, it's a great trade. So I'm not risking 337. Again, if it hits my stop, I'm out of the trade. But, I mean, we're able to buy this thing 7 points lower than where the market is with a $60 premium and an hour left to go. I love that. So it takes some getting used to. If premium is throwing you off, just go for the low premium, wider spreads. Again, if premium is throwing you off, if all this is confusing to you and you want to focus on one thing at a time, then focus on low proximity spreads, 415 expirations, or 230 on oil, or 130 on gold, or whatever. Okay? Low proximity spreads with premium either positive or no more than like minus 20 bucks. Okay? So like all these are a choice right there. Premium doesn't cost more than 20 or premium is positive. And if it's positive, I'm not really that worried about it. But if you really want to trade directional, you want to trade like as close to the center of that puppy as you can get. Risk reward. Well, this is maximum risk, 200 bucks. That's maximum reward, $100. If you bought the contract and it expired above the ceiling, you could make 106. If it expired above the ceiling, if you bought the contract and it expired below the floor, 42.40, you could lose $193 right now. So does the risk reward make sense? I mean, that's max risk, max reward if it went above the ceiling or below the floor. Beyond that, whatever price you buy at, every tick you sell higher, you'll make $1. Every tick you sell lower, you'll lose $1. That's why you thought 4270, 4300 was a good buy. Okay, well, it is lower risk, but it has to move 43 ticks. It's going to have to move 10 points for you to make anything. So you can't just look at risk and think that's going to make a good trade. See, Leah, I'm not holding the contract till expiration. I'm not going to take a $200 loss on a contract. If it goes against me and hits that predictor line, I'm getting out. So max risk does not mean the amount I'm willing to lose on the trade. It means if the world came to an end, if my computer went down, if I took a phone call and didn't pay attention, if I had to go to the bathroom and the market crashed, that's the worst thing that would happen to me. But I'm going to get out if it moves against me and hits like my predictor line. So just because it says $200, I mean, when you buy a future, it's $5 times, or it's $20 times the value. I mean, you realize if you buy a Nasdaq future, it's $80,000. You're literally risking 80 grand. Did you know that? You only got to put up 500 bucks, but it's 20 bucks a point. 42.63 times 20 is 85,000 bucks. Are you going to hold on to it all the way down to zero? No. So don't hold on to the spread all the way down to zero either. Now, if you happen to get fortunate and you get a low risk, close proximity spread, heck yeah, you don't have to. But often you don't usually see me getting those low risk, close proximity spreads. So, because a lot of times I'm going to be in and I know I'm going to be out 4, 5, 10 points later. There's just not enough movement for those low risk spreads to make any money for me. I want to get in this trade. Moves up 10 points, hop out, maybe I make 8. Okay, or I pick this trade. If it moves up 10 points, I'm pretty much going to make 10 points on that trade right there. Because that's a wide spread. That middle 30% is huge. But I got to put up a lot more money. And sometimes I'd rather buy, and it sounds weird, okay? I can get point for point using this spread right here. Okay? I mean, they're literally like a couple ticks off. This fluctuating bid offer. But sometimes I can go in, and for half the money, I can buy twice the contracts and make a lot more money than point for the amount of capital I'm putting up. So that's why I may choose a lower risk spread than that spread. You know, this one's pure premium. It's like, yeah, the risk is massive. 350 bucks. Only make 60. Except for it'd have to drop 7 points for me to break even. After that, I'd start losing. So everybody does it, Leah. You're not alone. This risk reward is not the thing to get wrapped up in. So now it does help me if I see 2 trades and I'm like, hey, I can put basically the same trade up for like half the cost. Well, yeah, I'll put that up. But I'm pretty much putting on the same risk regardless because I'm getting out if it moves against me by 5 points or whatever. So does that help out? Like, risk reward matters, but not as much as you think it does. It's your worst case scenario risk and your best case scenario reward. Very rarely do I make the full reward on a trade. So to me it doesn't. It's not about how much I can lose. It's okay. is this the best use of my money? It's not about how much I make. It's, is there potential for me to make any money? Because I mean, sometimes you can only make $5 on them, right? So, is there potential money that I can make? Is that a good use of my money? That's what the risk and reward is about. Because I'm not staying until expiration, and most of the time I don't expect it to expire below the floor or above the ceiling, unless it's something that's like way out of the money. Well, then yeah, that could easily be a total loss. It's only $27, but it's $27 pretty much thrown out the door. Okay. Um, and then I mean it's one of those things you just if you just start trading them and start asking questions, it makes it a lot more sense. And you have to trade them. You can't study them and expect to get it. You got to sit down and hit it and go, what happened and why, and talk it out. So, okay. But the simplest thing is just choose a close proximity spread that has plenty of profit potential and don't worry about the risk or reward. That's the easiest, fastest, simplest way to start trading spreads. After you get that down, you can start becoming a premium collector, which has some cool edges and benefits. But if you can't get down at the money, you're not going to get down premium. When I say at the money, I mean like near the market. So we termed it near the market, meaning the price is very close within 10 ticks of where the market is. And they'll say NTM on it. You can even choose those trades. If you want to focus on them, you can go, I want the near the market trades. Boom, there's your near the market contracts that expire in the next 30 minutes or greater. Those are the only three choices. So if you want to make life really simple, you go, well, I'm looking for a buy that's near the market, that has at least 30 minutes till expiration or more. There you go. And if you want end of day only, okay, then you go down here and you can say, I want the daily contracts. And now you'll only see the dailies. So you can say, I want to buy near the market dailies. I'm not saying that's what you should do or have to do. I'm just saying if you want if you really just want to simplify your choice so you can just focus on your chart, there you go. I mean, this one can make 40 points. That one can make 20 points. Very rarely you're going to catch that many points. So, hey, I mean, I do catch 20 points quite, I guess, it's not rare, but, it's not constant. And if it does go up that far and I'm maxing out, close it and just go grab the other spread. You just made a lot of money, But, I mean, you can do twice as many of these for the price of those, which would double your risk still at $2 a tick, now instead of $1 a tick. So, I mean, you doubled your risk, but you also are using the same amount of capital to do it. So you can choose. I mean, this one just makes it, if you want to make it stupid easy, you just choose the master spread. That's the widest spread there is. And you'll know because it'll have the biggest reward, biggest risk. That's the really, really, really simple way to play. And it says $400. You're like, oh man, I only have $500 in my account. Well, don't let it go down 40 points before you exit the trade. If it moves down 5 points against you, get out. You lose $50. You know what? Doesn't matter which one of these contracts I choose. The market moves $5 in my favor. I mean, here, let me show you this. Okay, I'm just going to do one of each. I want to at least have a fighting chance. What does the market look like right now? Okay, we'll just say up for the heck of it. If I can find the right window. Alright. If I go here, buy one of each of those, okay? Doesn't really matter which one I use. It's pretty much the exact same thing. See that? Look at my P&L. A little chop right there. Got a bunch of long stuff. Nothing green. Say we're targeting this right here. We'll see what happens. Playing between the zones. What are we targeting? We're targeting 42, 63, 50. About 3 points. Okay. But the biggest lesson I want you to see, look, I chose both of those at the market spreads. End of day, the daily at the market spreads, and look at my P&L. So do y'all see what I'm saying? Makes it really simple. All right, we're about break even on the trade, and I'm going to wrap up the webinar, so I'm just going to close these out, okay? But I just want y'all to see how the profit and loss is essentially the exact same thing. If you want the simplest spreads, choose the end of day at the market spreads. Master trading the chart with those. And then from there, you can start getting more creative with premium. But if you just want to make it like, Darrell, how can I start this now without having to spend 3 months studying? That's how. Okay? All right, we hit our profit. Let's take it. There we go. 40 bucks. Woo. Okay. All right. So I hope y'all enjoyed this, got a lot from it. Let's do another review tomorrow on the webinar. I will see you there, okay?